play on a shipping and logistics brokerage company for freights. Basically, the premise here is that so CHRW is an integrated shipping and logistics company. Vast majority of their revenue is coming from freight brokerage. Basically, a little description of freight brokerage there. But the big news is that Amazon announced the launch of their digital freight brokerage and logistics platform, FreightWaves. So every time Amazon enters someone else's space, it's like never a good sign for them. And they basically
we don't want to say every time.
Not every time.
There's a history
Right.
that we're going to talk about where when Amazon enters a particular space, it can cause disruption, and it could cause stocks in that sector to really sell off. Is that fair?
Correct. Yeah. And basically, the premise here is that they already have a huge shipping platform, a crazy amount of characters, and they're already doing so much business in this area that they're turning their a cost right now for them. They're turning that into a revenue, and at the same time, they're undercutting the rest of the market by 26 to 33%. So just destroying everybody's margins, basically, drawing as much business as they can from other people, and then start upcharging them. So basically, they've been doing that in a lot of areas, and this is just another example of that.
Yeah. And how did you feel about the fact that they were going to be undercutting prices?
That's a pretty significant margin, and especially for these brokerage companies that really depend on the spreads. That's really going to eat into their profits.
Yeah, so in the past, when there has been a rumor or there's been an announcement that Amazon is going to enter a particular sector or industry, those stocks and the stocks in that sector have had a history of selling off. And one of the things that is surmised is that Amazon will start undercutting on price. Not even that they have decided to undercut on price, just the potential that they will undercut on price. And now here, you have an example where they're saying, we are going to undercut on price. So you guys in this industry are going to make less money, or you're going to have to figure out how to compete with us. All right, so that is a huge distinction with this hit to the marketplace than we've seen in some of the other examples.
Right. Yep. Yeah. Basically, disintermediation is what all this is about. Basically getting rid of the middleman and doing it themselves and expanding. So,
on June 16, 2017, Amazon planned to get into the grocery space, and Amazon announced they were going to acquire Whole Foods for $40 a share. And a big deal, and that's kind of what the grocery stocks look like. Got Kroger, Costco, and Walmart there, and once that news hit the wires, they all took a big hit and drifted lower over a few days, but that's the initial move that you see there. So here's another example.
Let's go back to... Okay, good. All right, good. So good research there. What else were you guys looking at?
A few more examples.
So the Roku example, okay.
Yeah, this is one of the most recent ones to set up a really good trade. So it was reported that Amazon had asked advertisers to pledge millions of dollars to support a Roku rival. So,
and it sold off. If we actually had a longer-term chart, it continued to. It sold off much more over multiple days.
that's the case for a lot of these too. These are just the intraday kind of patterns that we're.
All right, so these are just the intraday charts, but if we looked at multi-day charts, they'd be even more widespread, which shows that there was real selling, multiple day, big money selling that came in after this news hit the headlines. All right, what else you got?
Amazon announces the purchase of PillPack, so they're getting into the pharmacy space. So that's CVS and
Walgreens.
Walgreens. So January 30th, 2018, after the market closed, Amazon announces it's going to collaborate with Berkshire Hathaway and JP Morgan to launch a company aimed at cutting healthcare costs. So you can see the shares of healthcare companies, United Health, CVS, and Teva Pharmaceuticals plummeting shortly after.
Sorry to interject there.
Yeah, so these are kind of just the intraday fundamentals. Average volume 3.8 million. That's the volume of the day. Sorry, average volume is just about 1 million. So our vol was pretty elevated, just under 4. ATR 1.62. Short interest not very high, 7.28%. Really high institutional ownership and a pretty large float, so pretty big large cap company. Here is the this is the daily chart of CHRW. Basically, been kind of sideways for like a little over a year now, and then just the other day on this announcement, we broke under this most recent support there at $84. Here's just another time frame, kind of big picture of where it's coming from. You can see on the announcement, basically collapses and then continues to move down towards $80 from $88.
All right, so the significance of looking at those long-term charts are there people that are long or underwater who may put some pressure on the stock as well, selling out of their losing positions. That's why you want to go look at your long-term charts and see, are there going to be extra sellers in here because we're below long-term support levels.
Basically, this is how we would have managed the trade. We were not in the trade, unfortunately, and we should have been, as we talked about. But so we the news hit the tape on most online sources, and the swap hit about 950. So there was a really big dislocation between when some people heard the news and when we did. Basically, we dumped right from the open, a little bit before the open actually. So there must have been some articles being passed around or word on the street about this that caused that first really big collapse. But on news like this, that doesn't mean the opportunity's gone. There's going to be more opportunity in the day to short it as well. But so right around 950, we were thinking that we would short one tier as a feeler or starter position, just to get a feel for how it's trading and basically hold on to that as long as it's staying under VWAP. the plan there would be if it gets above VWAP, consolidates and goes higher, we just want to cut that. It's not behaving quite as well as we'd like and perhaps retracing too far. Then when we come into VWAP and try to test above it at 83, basically we kind of stuff there, continue lower and then consolidate under VWAP. So that's a good indication that there's still a lot of selling pressure here. And we would short another 2 tiers, kind of scaling in as we're rolling over there after bouncing off of VWAP. We now have a definite risk level on the trade, right above 83.50, which is that previous high there. That's where we want to be at if it gets back above. And basically, we would cover 1 tier into the prior low.
The stuff pattern means you get above a significant price, volume increases, you see volume increasing, and then you close below that breakout area. So this is really more of an example of we leak above VWAP, and we can't really sustain those prices. But that's a very different pattern than a stuff pattern. The stuff pattern is actually a better pattern.
Not quite a stuff pattern.
We'd have more confirmation to add if we got a stuff pattern. Also, I really like how you're looking at VWAP. You're not sure where to short it. How is it going to react when it comes into VWAP? It's overextended. Let's let it pull back into VWAP. Let's see what it looks like there. That's a good place to be watching. Also, just a general consolidation area would be into a pull-in would be another good place to sort of watch. But I don't think a lot of people watch that VWAP area. They're sort of lost. I'm not sure where to look to short something when they think they want to be in it, and it's run away from them a little bit. But that's a good job there by you.
So like we said, by here we would be scaled into tier 3. Our risk would be really defined here at this point. That's kind of the inflection. And basically, I always think it's a good idea just to cover some risk at the prior low in the case that we bounce and retrace. So we would cover 1 tier at the prior low at this 82 kind of support area, holding the other 2 tiers because we're still looking weak. And then right back here, we see a change in the pattern here a bit where we're holding up really cleanly at 81, bounce cleanly right off of it and start making lower highs and grinding up. So here would be another place that you'd want to take off probably a 2nd tier. And basically, from here, there's a lot of ways you can manage it, but what we were thinking is we just want to leave 1 tier on in the case that we just keep rolling over as the day goes on. And that way, we still feel comfortable having a higher price if we want to add later in the day, but essentially holding until the close because we keep grinding lower, but still kind of holding up this 81 support level so that by the end of the day, you can take it off or, judging by the risk, you could hold it overnight but had earnings the next day, so that's the risk there. So probably not a good overnight hold here, but yeah, that would be the trade management here.
Okay, good. Clean, right?
Yeah.
Doesn't really spend much time above VWAP. Kind of leaks above there, even though it had such a steep down move. And then when it makes a new low, comes back and really can't trade above the prior low. Right? Can you just highlight that area? Show that prior low. So can't really trade above that prior low area. So pretty clean. Challenge number 1. If you miss one good trade, then playbook it. If you miss one of your trades, it's already in your playbook, then playbook it. See yourself in the trade with your playbook. Be specific. See yourself crushing this trade. Be specific about entries, exits, stops, targets, adds, and risk-off areas. All right? Challenge number 2 is to adopt the winning mindset. Adopt the winning mindset. It's not acceptable to miss one of your best trades. It's not acceptable. You're too good to miss a trade like this. You work too hard. You deserve to win. Challenge number 3. If you miss a good trade, ask why. What can you do so you don't miss one good trade like this again? What filters can you build? What can you do with technology so you don't miss this trade even though it's coming from your squawk? Can you build a filter that's going to catch this? Go back and do that work. What can you change about your prep? What can you do to improve communication with other traders so that they alert you to these opportunities? So is there something you can change about your pre-game routine so you wouldn't have missed it? Should you be talking to your other guys about communicating better on the desk so they inform you of these ideas? Those are the 3 challenges. When you miss a trade, don't sulk, get better. These are ideas to get better.